Welcome to Power Charting. My name is Bruce Frazier. I am your host. And today we have a very special session with Andrew Cardwell. And he is Dr. RSI. And Andrew is back for his second time on Power Charting. And we had a huge response to his first show that he was with us. And we're going to continue on and advance our discussion on RSI using the Cardwell methodology. And it's going to, in this case, be applied to current markets. So I want to first make an announcement about the Wyckoff Market Discussions, which is a weekly webinar series for those of you who are Wycoffians and would like to be part of our Wyckoff community. So these episodes are Wednesday afternoons, 3 p.m. Pacific time, and you are invited to come check us out. Go to wycoffassociates@gmail.com if you've never been to one of our Wyckoff market discussions, and ask for an invitation to attend a future episode, see what we're all about, and if you find it useful and enjoyable, educational, become a subscriber. All right. So today we're going to be with Dr. RSI, Andrew Cardwell, who began his RSI career in 1978 and has been a educator, a great RSI thinker. He's created incredible technique and methodology and has taught it to students around the world, 28 countries. 70% of his students, his current students, have been referred by prior students. People absolutely love trading with the Cardwell RSI methodology. So his methodology has been immortalized in the Stock Charts Chart School. And you can see here that he's acknowledged as having created the concept of bull market and bear market ranges and range rules. And Andrew has introduced positive and negative reversals for RSI, which we're going to talk about today. And in addition, Andrew has turned the notion of divergence literally and figuratively on its head, which sounds like it could hurt. But anyway, Andrew, welcome to Power Charting. It's so great to have you back.
Bruce, I always enjoy coming on with you because we have fun. There should not be stress in trading. If there is, you need to study and learn. And
Go ahead. No, I was just going to say, the one thing I want everybody to pay attention to are Drewisms.
Oh, my Drewisms.
Yeah, so these are like flybys. And so, you know, out of his mouth will come the most interesting and amazing phraseologies and terms and things, and he doesn't even know he's doing it. And so we, as a group, have to make sure that we jot down the Drewisms when we hear them. So I don't want to put any pressure on you, Andrew.
Okay.
Yeah. But if we don't get one or two Drewisms today, I'm going to be disappointed.
Well, I remember when I sent you a text yesterday. I said, I've been trying to think of a couple Drewisms for our recording, and I can't. They just have to happen naturally, and I don't even know when they're coming.
Well, I think one good Drewism is your first one about RSIs are so widely used and so misunderstood. So yeah, that's a Drewism right there.
Yeah, that's my mission statement here. Everybody's using it, but very few know how to.
Well,
I mean, you know, the classic.
We're gonna fix that today.
Okay.
And what part of it is, everybody gets a homework assignment, because I'm an old school teacher, and that is that I want everybody to go to Stock Charts TV in the YouTube channel and go to Power Charting. And of course, you should watch all the Power Charting episodes and tell your friends. But if you look at this upper red box, you'll see on the home page for Stock Charts TV, you'll see my power charting logo and just click on the view full playlist, and you'll get a list of the episodes historically. And you'll see February 1st, 2019, Power Charting with Bruce Frazier and Andrew Cardwell. And that's a really important episode to watch, because in it, Andrew makes a presentation where he shows the basic method and terminologies and how it works. It's a wonderful episode, hugely popular. Many people have seen it. So that's a homework assignment. Another homework assignment is to go to the tsaasf.org website, and right on the homepage is a free webinar that was recorded back in February also, where Andrew came and gave a wonderful presentation on the trading with RSI methodology, and I would definitely view that one also. So 2 homework assignments, but we push on today, and we are going to go into current market analysis, which will be a lot of fun, and start our discussion here. So our first chart for today is going to be the Dow Jones Industrial Average. And Andrew is going to apply the methods and techniques that he talked about in the prior episode to the markets currently. So Andrew, take it over.
Okay, thank you, Bruce. For those with the homework assignment, I'm going to try and reflect and point out a couple things here from the homework assignment that you'll be able to recognize once you've watched that first. I'm also going to, I guess I tried the first time to take my basic course, 11 hours, and compress it like I do at a lecture in 1 hour, like I've done in Vegas or New York. But today I just want to highlight where we are in relation to everything that you're going to pick up in that PowerPoint presentation. This market, the first one we're looking at is the Dow Jones, and it just keeps, like the Energizer Bunny, just keeps going and going. But what I want to point out from these charts is this line here is basically at about 50. I tend to have different range rules, 80 and 40 for uptrends and 60 and 20 for downtrends. Now, if we go back, this top chart, and Bruce is going to cover it later, how to do it in stock charts, put a bar chart at the top, simple 2 charts. Bar chart at the top with a simple 9 and either an exponential or a weighted 45 on close. Bottom is your standard 14 period RSI. And first thing I want to mark is this was a divergence when it went to a new high. What's more important is down in this area is the 30 level. If we move it to 40 and we draw a line at the 40 level across the page showing where the 40 is, it's a good example of my range rules. There's 40, and then we'll draw one at 80. This tells you visually by looking at a chart. It never really went down. When it did go down, it was making higher bottoms. Then both moving averages turned positive. The 9 on close stayed up. The RSI is looking at the momentum value. The moving averages on close are looking at price. So even though the RSI moving average, and again here, it's standard 14 with an RSI 9 simple, and either a weighted or an exponential 45. But it shows you a little sell-off in momentum. It never even got down to the 40. It came back to the 50. We formed a bearish divergence and had a deeper correction that went down to the 40 level, 39, 38, 35. It's not chiseled in stone. But we did have a bullish divergence at the bottom. And when I point out divergences, I want to dispel a myth right now. They are not reversal signals. They're merely overextensions in a trend. But the range rules, if you put no other chart, nothing on your bar chart except a simple bar chart in the top window, and the RSI and looked at where the range was. If it stayed in this 40 to 80, the trend was up. When you got a bearish divergence, it got overextended, but that's not a true reversal signal. The thing about RSI with the moving averages is you can use them for trend. You can use the range rules for trend. So most of your work is showing you the actual trend. Most people just listen to other people. It's your money. Learn what to look for to identify the trend first. And this is a daily chart. And you can see each time that it come down, it started back up again. Now, the positive reversals that I teach are when a market gets overextended. I don't really like to use the word oversold, because while the trend is up, I'm watching for buy signals. While the trend is down, I'm watching for sell signals. And folks, for the first 10 years I was with the RSI from 78 to 88, I didn't even have a computer. All I had was an RSI spreadsheet that I worked off of, put the close in, calculated the RSI, and plotted it on graph paper for 10 years. So I learned a lot of little nuances that the RSI shows that some other indicators don't show. But I will tell you that it works so well as a complement to whatever you're using, Elliott waves, stochastics, Fibonacci, whatever. But it can also work as a standalone model, and that's what I've used for 40 years and what I've taught for 35 or 32. The thing about the positive is range rules and moving averages will give you trend. The RSI gives you overextensions within the trend. But when you notice that you see an RSI come down to a low point, way back here, was at about 19,700. Look at where it is here, 20,700. That 19, whatever we were using back here, 19,000, say 700, to the 20, that's 1,000 points. If we added 1,000 points to that previous close at 20,800, it's telling us we're going to go to 20,180, which we did and we achieved. And when we achieved it, it kept going. And look at the top, the 9 stayed above the 45 on close. For trend analysis, you can take the guidelines I use. If both 9s are above their respective 45s, the trend is up. But if the closing price,
both 9s, you mean the 9 on the RSI and the 9 on the price.
Close, right, on the bar and on the RSI. If both of those 9s are trading and staying above their respective 45s, then the trend is up. If the close moving averages are up, but the RSI moving averages are down, you should look for a correction. And these corrections will sell off into more positive reversals. So I don't know too many indicators that can identify trend change, and price forecast. And I've been around a long time. So when you see, in this case here, I'll zoom in for you. In this case here, when it sold off and made that positive, this positive was higher on a closing basis. The price close was higher than it was before. I'm taking the difference and adding them to the high close and setting a target. Well, once this 9 on RSI goes back above 45, they're both in the up mode. But when the RSI moving averages are down, but the close moving averages are up, it's basically sideways to up doing a correction. When you start to see momentum highs, you'll get corrections. People take profits. Here, both moving averages are up. Here's a slightly higher close, I believe, 23.5 and 23.3. That's a bearish divergence. Everybody says, oh, the trend is down. It's over. It's finished. The great bull market has ended. Not really, because then it turns around and starts making positives again. And then you get the longer term positives. which give you even higher targets. And this is on a daily chart. And the beauty of RSI2 is it works on daily, it works on hourly, it works on weekly, it works on 5-minute charts, but I don't recommend trading 5-minute charts. But when you see enough off your daily, the longer term time frame should also, in the case of a positive, that weekly trend should be up. This daily trend is up. If you want to narrow down to 240, 60, they should show the same type of thing. And this last positive, longer term, here's a real beaut. You can take the closes, 926 here through this close and extend that line. And you're drawing a trend line now on a bar chart, not based on subjectivity, but based on a rule that this is a positive. It got more overextended to the downside, but the price was greater. And you're looking at 20, we'll say 22.3 and 23.2, 900 points above this high close.
Now, so what would be your entry strategy for identifying a point to enter the market off of an oversold, or how would you do this with the RSI?
As far as the signal, the chart is telling me this is getting ready to turn back up. You may use Fibonacci retracements, you may use swing points ahead of time, pivot points, and everybody does pivot points a little differently. But I would take the high, low, and close of the previous week. I take high plus low plus 2 times that close, add them up, divide them by 4. That gives me the pivot point or a center point. And then I take that, like I said, I do them a little different. I take that pivot point times 2 and subtract the high for that day or that week to tell me what the pivot low support should be. Plus, you're going to turn around and you're going to identify this was a previous top that should become a bottom. This was a momentum high. This was probably a longer term positive as well with this. And draw trend lines horizontally for support levels. When you're doing these pivot points, calculate what the pivot point is. Look here, we're just drawing a trend line because we don't know what's happening over here. But when that closes, say, it should be support. There's conservative, you can wait until it closes up. I have some students who've been with me 15, 20 years. They'll take any price below the previous day's close and ride it. Then we start to get more divergence. We get another divergence from this high through here, then another one through here. But we're still going to see that with a positive. So depending on the risk tolerance, some people are aggressive. Like I said, I have traders who've been with me 15, 20 years who say, I'll take close or better. That's when you want to drop to maybe an hour chart and see if you're seeing positives in the hourly as well. It could have corrected into a positive. Look at that price. Look at the closing price that day it closed there.
Now, you have some additional examples for us, and I want to make sure that we can get some of those in.
Yeah, we'll go
out of time.
Well, what I said we were going to try and do today is look at this for where it is now. And for where it is now, we just came off a divergence. Okay, that December low, look at where your moving averages were. Now, these positives are going to add, but the negatives, when we see negatives, it's telling us there's a bear divergence. Here's a rally to the 59.9 in the RSI. And the next day, 60.15. I mean, sometimes this is to get near 60. These are not chiseled in stone. Sometimes there's a throw over. But that's telling you right there, it couldn't get through 60. It corrected. It went to a bullish divergence here. And you can extend that line a little further from a momentum low through another bullish divergence. But let me tell you, bullish divergence comes in downtrends. So if you see a bullish divergence, it's probably going to be corrective. if you look at the moving averages, they're telling you that 9 is still below the 45. You would have known well ahead of time. I spoke mid-November at Traders Expo in Vegas and said the market's going lower before it goes higher. And people said, how did you know? I said, just range rules, moving averages. Okay, so where we are right now is we had a momentum low. Look, it went all the way down to 20. But when it came up, it started breaking through 60. Look at your moving averages. They were positive. 9s were above 45s respectively. We had a little bear divergence when it got up a little bit ahead of itself. Then we have support from a previous RSI point. Right through here, we can draw a line and say this momentum low, 25,053, this close, 25,450. That's 400 points above the highest close you made. Said it should have gone to 26,4. The moving averages and close are still positive. Here we had a little head bump. We pulled back down. But what do we have? Yet another positive. 25,450 and 25,502. There's a 50-point positive, roughly, that's got to take out the previous high close at 26,026. And what did we have the other day? 26,331. So in an uptrend, you're going to see bearish diversions, positive reversals, range rules, moving average confirmation. It's a checklist that I teach. So this is still positive, but I think it may be a little overextended again because we've never even touched the highs that were made in October. So let's look at another one, crude oil. Crude oil's been positive, been moving up, surprising people. Where's crude? Let's see. And you'll see, once this chart comes up, look at where the range rules are. Look at what the moving averages were showing. It went down. Look at it went all the way down to a 13 RSI. That doesn't not necessarily, I've seen people on TV, analysts say, well, the RSI is, under 30, so you should buy it. If you bought it here, you lost a lot of money. Just because it's under 30 doesn't mean it's oversold. It's overextended. You had some very tight bullish divergences, but here's an example of a negative. 69.10 and 53, we'll say 54. That's $15. $15 off of 51 says we could go possibly that low. $15 off of that low close, you could go to 37. But it didn't. The fact that it didn't, always look at what a market doesn't do when you're doing your analysis. If you set a target and it doesn't get there, there's a reason. And in the case of a failure, people ask me all the time about failures. I say, well, if you get a failure to achieve that downside target, and when it does achieve it, it should confirm it by going, the trend's still down, by going below it. Now it failed to achieve it. It made a nice longer term bullish divergence. And your 40 level comes across right about here. It never even got down there. Here's a positive reversal, the difference added to the high close. Here's a break of the 60. Look at the two sets of moving averages. Here's some more positive. This is still up. What's the other one we're going to look at? Tesla or Amazon? You can take a look at Amazon.
We have a couple minutes left.
Okay. Where did I have Amazon? I'm sorry. And it doesn't matter what we look to. Here's Apple. Here's a quick look at Apple.
So now we have Amazon up. Take it away, Andrew.
Okay. We had a little bullish divergence. It tried to get above 60. Didn't do it. Came back down to 30. So it never went under the traditional 30 oversold. And some people may say there's an inverted head and shoulders. What I looked at is that's a momentum low. Moving averages turned positive. And if we look at where the 40 level is, it never really came back down to the 40 level. And we started making higher highs, moving averages. The range rules, the moving averages, they're very, very helpful. The beauty of the RSI, like I said, is it gives you so much in one indicator. And I was fortunate to start when I did with it and stay with it. But for right now, yes, stocks are still positive. Gold's backed off a little bit. But to me, it's still, when I look at the weeklies and the dailies on gold, we're still positive. We're still holding the 40 levels, and we may be about to start up again. There's a lot of markets out there that are at key inflection points: dollar, gold, crude, stocks. Use it on yield. You can use it on any market you want, any time frame. So I know this was quick, but a lot of people have been asking me about the Dow, saying, I don't see any reason to get out. I'm going to stay with it forever. And that gets a little scary. So I'll give it back to you, Bruce. For those that are on here, I am going to offer some course specials. And I believe Bruce needs the, he's got the PowerPoint slide for it. Bruce, if you'll.
Okay, so here we have a stock charts chart with RSI on it, and just so that you can see, because so many of the people who watch the show are stockcharts.com subscribers, that the RSI can be set up exactly the way that Andrew uses it. So you can see what I've done is I put the RSI on top with a 14, which with the standard 14, which is the default, and then the moving average is simple 9 above, and then below we have the EMA 45 moving average on the same RSI, so that you can see both moving averages together, and then we put the 9 and the 45 on the price. So down below, just so you can see how to do this, is you can see the simple moving average on price at 9, exponential on 45, 2 RSIs, and then you set the moving average over here, simple 9, exponential 45, and then you can see these. And here is your Tesla example.
Right, and if you notice down here on the lower right, the last 3 peaks that the RSI had never really got above 60 much and turned down again. And the moving averages on close are still pointed lower. I think you're going to see a retest of the October lows.
Interesting. Okay, so that's how to do that. And so we will we want to put up these offers that Andrew has graciously extended to our viewers. And so you can see that there's 2 offers here. Andrew, very briefly, you have the basic RSI course that you're offering, and also basic RSI course with 2 hours of personal instruction. Oh my gosh, more Andrew.
More time for truisms.
Okay, Andrew, we got to stop there, and thank you all for attending, and we will see you again soon.
Okay, good to be with you.